What's up guys, this is Chris, welcome back to my channel. Today's video we're talking about 3 stocks that I've been buying lately, and this is a great topic as a lot of people are getting those $1,400 stimulus checks coming soon, and there's a lot of great things to like about the stock market with some big discounts that we've been getting lately, and of course the big economic boom that we are experiencing and going to experience for the rest of this year and beyond. So a lot of stocks are poised to do very well. So in this video, you're going to get 3 great stocks to buy. They're very diverse in different industries, and that'll help you also diversify your portfolio. So if you're excited for this video, make sure to smash the like button and subscribe for the channel. And by the way, if you are interested in joining a private Discord that I work with, make sure to see the first link in the description down below, and you'll also get a 50% off lifetime discount code. The first stock that I'm talking about in this video is GNOG, otherwise known as Golden Nugget Online Gaming. This is an online casino company. Over the past year, online gambling has taken off in a very significant way because of the pandemic, and a lot of in-person casinos were shut down or capacity limited for a very long period of time. So GNOG is a high-growth online platform that is currently operating in a handful of states. They're really majorly only operating in New Jersey, but they've been signing up multiple states throughout the past year. They've actually just released, over the past 24 hours, an update where they've gotten a license to operate in Virginia. Now, that is going to take some time to play out, as well as in other states like New York recently, that they've gone and acquired some licenses there, gone some partnerships there to be able to operate. And that is going to generate hundreds of millions, if not billions, of revenue in the future, right? Added together, they're working with a total addressable market of well over $10 billion in maturity. So it's not too difficult to imagine how a casino makes money, right? As the house, you're going to have the odds for you, and chances are most people are not going to win on their gambling, so that's going to be a lot of money coming in as income. And over the past year in 2020, they did some really incredible results. Their revenue increased 60+%, and Q4 was actually much better than that even. I believe around 90+% revenue growth. Okay, this is very interesting and very exciting because with all those states coming, you gotta say that this is a long-term growth stock that has largely been ignored. Okay, when you look at the revenue of online iGaming versus land-based gaming, traditional casinos, before the pandemic, that was around the mid-teen percentage range, around 15-16%. I think that will continue to grow. During the pandemic, obviously, it was an exceptional year. That iGaming percentage was actually around 60% of all gambling. Of course, that's not going to last, but I think over time, you're going to see that they are going to be able to grow. iGaming as a sector is going to grow into those 20s and possibly 30% of all land-based gambling. When it comes to GNOG, you have a couple of big name competitors that are operating in a similar space, DraftKings and Pennat. Now, those companies do have a sports betting side to it, whereas GNOG doesn't, so that does factor into some of the valuation. However, I think that GNOG trading at a price to sales around 10 or 11 here today is a disgrace, especially when you compare the valuation of GNOG to DraftKings. I think that there is something seriously wrong here. So GNOG's price to sales ratio is around 14 here today. That suggests the value of the company is 14 times its sales. Whereas if you look at DraftKings, which is not profitable by the way, it is trading at a price to sales of 90 plus. So I don't know, you guys do the math. That's like 7-8 times the valuation of GNOG. I think that is way too expensive there, and GNOG is way too cheaply priced here. So with this company, I personally have 500 shares. I also often play a lot of options with these guys, and I think that there is a lot of upside potential here. Minimum, I would say 25 plus, back towards those all-time highs. Otherwise, I don't know what's wrong with the stock market. But, when you look at the technical setup here, it is very promising, and pretty much every time it hits those low 10s, around 10, 11, 12, stock bounces back very strongly, and you're looking at a pretty nice solid base here. You see those moving averages creeping up as well, and it did come off of a very low RSI. Put that all together, and this has the making of a very strong bullish run going into the next weeks and months ahead. Stock number 2 on this list is Corsair Gaming. Okay, Corsair is a stock I featured in the September 2020 stocks to buy video, and between that time and the time I sold it, we actually got some pretty strong gains, about 40 or 50%. I bought into the stock around $35, sold around $45. Happened to ride up in a massive way because of the Wall Street bets and short squeeze stuff. So that was a good opportunity for me to take profits personally as someone who is a relatively long-term investor, but I felt that that short-term surge was too good to be true and probably wouldn't last, to be honest. And since then, Corsair has released their Q4 earnings, and the results were very good, right? Over the past year in 2020, Corsair did do 50+% revenue growth, which is very strong and very powerful for essentially a consumer discretionary company. You know, this is a company that makes products for computer components as well as peripherals, meaning accessories like headphones, microphones, webcams, and the like, right? These are all products that have done well during the pandemic because everyone loves to game at home and got nothing else to do. And a lot of people streaming and also, you know, doing videos such as myself. So there were a lot of big industry tailwinds going on for it. Now, in 2021 and beyond, there is still a very large total addressable market for them to capture tens of billions of dollars at play here. And compared to some of its competitors, again, you're going to see that there is some differentiation here, some competitive advantage. A lot of its competitors typically only stick with peripherals, right? Whereas Corsair, they're doing a lot of other high ticket price items like those hard drives and everything that goes into an actual physical computer. A lot of those things are like thousands of dollars per item, per SKU. And I'll put some screenshots here for you to look at. They have really good reviews. So I think that they do have a very strong business here. And this definitely has a lot of potential. Now, their guidance for 2021 was very low, I'll be honest. It was not too impressive, right? They're guiding for about 10% growth. But keep in mind that this management is typically very conservative. I believe Q4 2020, they raised the guidance 2 or 3 times and then they still beat those numbers. So I would expect them to do probably, it's going to be around 15 to 20% growth. Corsair has sold off a lot over the past month or so, and the forward PE right now is only 18. 18 on a decent growth company is very attractive. I would say that it really should be trading around a 25 forward PE ratio. Okay, and again, this is a profitable company. So I personally have 150 shares right now, and I am going to continue to add shares as long as it stays in the low 30s. So if you believe it is going to move towards that 25 forward PE ratio type of numbers, I think that you would expect at least 30 to 50% upside from here. And looking at the charts, you're going to see that 30s is generally a very strong support level. It's a nice base. Of course, there is some concern that the IPO lockup period is going to end. And if you don't know what that is, basically insiders can start selling a lot more shares onto the market, which could potentially create some short-term pullbacks. But with the chart set up like it is, I think that there is a good chance it's going to move its way back up actually towards the 40s, and over the long run, possibly going towards that 50, 60 target range. And stock number 3 on this list is going to be GOCO, okay? Go Health. Now, this is again a repeat stock I have on the channel, and this was one that I talked about in January 2021. And since then, you know, admittedly it has not done too well, but I think, you know, hear me out, there is a lot to actually like about this company, and I'm probably more bullish now than I was in the past. So when it comes to GOCO, they are essentially a Medicare insurance broker. So if you don't know what an insurance broker is, essentially they're a company that is kind of like a middleman third party. They work to partner with insurance companies like United Health, for example, and they try to get that end consumer, okay, and pair them up. Now, with their technology and their really strong customer service and dedicated support teams, they have a lot of they're hiring right now actually in a lot of different states, and they really try to differentiate themselves on a number of key ways, okay? With their, proprietary technology and the data that they've collected on millions of people, they are able to really drive some long-term value on each customer. They get a commission every time as well, and throughout the lifetime that the person is on that particular health plan, they do collect money as well. So it is pretty much a machine that keeps feeding off cash and cash and cash. So by the way, another way they really differentiate themselves from the competitors is that they have the highest revenue in the entire industry when it comes to Medicare third-party marketplaces. Okay, they are the most profitable as well. They did a really strong profit over the past year, and the next year, when we look at the valuation, you're going to be very shocked and surprised too. But they're expected to make really strong profits, hundreds of millions of dollars. And the third thing is that they are the largest Medicare enrollers. So this is pretty much the top play in this specific niche of insurance brokerage. Obviously, there are different insurance type of companies in general in this space. The most similar ones to GOCO is eHealth and Select Quote. There's also different companies like Clover and Lemonade that do actual insurance plans themselves. But looking at the growth here a bit more specifically, this company over the past year did around 60% revenue growth, and next year they're projecting anywhere from around 30 to 50% growth. So that's around a 40% growth at the midpoint. When you compare it to all different types of stocks in the market, right? 40% growth would be amazing. 60% growth in the past year would be amazing. But nevertheless, somehow this stock is actually down a lot, like 50% from its IPO price. Over the past year, it's done nothing but go down to a base of around 10 here, $10 per share. Starting to bounce back up a bit again, but I think that this is a really strong fundamental case here for buying the stock, as well as technically. Looking at this very strong triple bottom support level at $10, and towards the upside, you have anywhere from 14, 15, 16, and beyond that, potentially, if it gets recognized, you could see it go back to something like a 20, which would be a much more fair valuation. So when we look at the valuation here, again, this is a very, very attractive stock at an undervalued price level. The price of sales on this company is under 5, and the forward PE ratio on this company is 10. So when you look at the whole market, everything else seems pretty overvalued compared to this company. The average PE ratios in the healthcare space even is well over like 15 or 20 or something like that. So this is definitely a stock that I think is not being priced right. And I think if you have the patience, there is very little risk and very high reward here. And there's some potential, I kind of doubt it to be honest, but there's some potential of this administration expanding Medicare access beyond age 65 towards actually around 60 or 61 or 62, and that'll open up a lot more people. But even if not, there are tens of thousands of people that are approaching retirement age every single day. It's going to be millions and millions of people overall. So this is a company that, once again, similar to GNOG and similar to CRSR, has a lot of long-term trends going for it. So recently I added another couple hundred shares. If it stays at this price level, I'm going to continue to add more shares to my portfolio. Very nice risk reward setup. So there you have it, guys. Those are my 3 stocks that I'm buying recently as of March 2021. This is not an all-inclusive list, so I may have more videos coming out soon about different stocks. So make sure you subscribe and stay tuned for more great content like this. Let me know in the comments down below if you own any of these stocks or you're interested. And until next time, my friends, stay well and invest responsibly.